What is up, you guys? Pete DiCarlo here, and today we're going to talk about NIO stock and if I think NIO is a good investment here, if I would be buying NIO shares around $58. For those of you who don't know, I did have some sizable position inside of NIO around $1.90 to $1.96. Since then, I have sold right around like the $4 range, which of course I didn't hold it long enough. But at the time, NIO was not looking as bright of a future as they have right now. There's a lot of talks about bankruptcy, and making a 100% return on my money was pretty good for the time. But in this video, I want to talk about briefly what the company does. We're going to go over some of the financials and what do I think is a fair price for NIO right now, as well as the long-term outlook and where I see them going. This is not going to be a full in-depth deep dive video on every single car they have, some of the perks, some of the downsides, how their business is ran, the manufacturing, all of that I put in a video that came out 2 months ago titled NIO Stock, $140 in 12 months, buy now or sit out. So you can just type in Peter DiCarlo NIO, or you can go find it. It's not that far. Also put the link up here and down below too, so it's easier for you guys to find. But yeah, so for those of you who don't know what NIO is or what they do, NIO operates in China and they are a premium electric vehicle maker. So it's not like, the Nissan Leaf of electric vehicles over in China. It is a premium brand, and their prices depict that as well. And from what I've heard and seen on the internet, the quality is there. The company designs and jointly manufactures, selling smart and connected premium electric vehicles, driving innovations in next generation technologies in connectivity, autonomous driving, and artificial intelligence. Its models include EP9 supercar, the ES8, the ES6, and the EC6. If you want to see more about those, like I said, go check out that video. I break them down. The company sells their vehicles through their own sales network, including NIO Houses, NIO Spaces, and their mobile application. The majority of the revenue is earned from selling their vehicles, obviously. Now, looking at NIO, one of the big things is that to think of, and I talk about in that video, is they don't make their own cars yet. They actually are partnered with a company called Jack Motors, so that's something to look for the future. The other thing too is that these cars are extremely nice, and after NIO Day, they've released a lot of other things. The biggest problem that I see for NIO from a manufacturing standpoint, and that's one of the biggest things, is their ability to get the cost down for them and to put these cars out into the masses, kind of what Tesla did. There was a long time when Tesla just kept coming out with these cars, and you look at the revolutionary car for Tesla was the Model 3. In my opinion, the Model Y and the Model 3 still will be what pushes the company well into the future. As they can continue to get the prices down on the Model 3, they make more and more money. So from a manufacturing standpoint, that is what people are looking at. And this is a company that is trading well above, in my opinion, it's worth. Morningstar has a fair value of $27.67 on NIO. I think that's about fair. If NIO fell to about $40, I would probably start buying long term. But let's take a look at some of the financials. So if we look here, you can see the price to book value is $70.91. If we take a look at the quick ratio, it's about 2.30. Current ratio is 2.42. And if we look quickly at the income statement, which I like to use Morningstar because you can look at income statements and balance sheets, but these give you the quick bullet points of different things that you really want to see, which to me is the revenue, operating income versus your net income, and then also is going to be your total liabilities versus your total assets, which we're going to talk about. So if we look, revenue, this is in billions. So for those of you who don't know, 2017, 2018, 2019, and TTM means trailing 12 months. So if we look at 2019, they did $7.82 billion in revenue, which is pretty good. And the trailing 12 months, so the past 12 months, so from January 2021 back to January of 2020, they have done $12.47 billion in revenue, which is really good. Almost a doubling, not really, about a 65, 70% increase in revenue, which is huge. But you have to realize, for a growing company like NIO that is that small, it's very it's impressive, but still it's if a company like Amazon was getting those numbers, that would be insane, simply because of how big they are and the revenue that they do. But overall, really good. Operating income, a loss of 11 billion. And in the past 12 months, a loss of $6.5 billion. If we look at the net income, a loss of $11.41 billion in 2019, and the past trailing months, $7 billion in losses. overall, if you're somebody who invests like a Benjamin Graham or a Warren Buffett, or you're a fundamental investor, these are not good numbers. What you have to realize is that from fundamental investing standpoints, this is not good, simply because the company is kind of hemorrhaging money. But in my opinion, as a speculative investment, there's some good things that you're seeing here, right? Increased revenue by about 60-70% from 2019 to 2020 in the last 12 months. And if we look at the net income, they are losing $12 billion, which is a lot, right? Essentially, in 2019, they lost $12 billion. In 2020, they made $12 billion. So it's not the best. However, while they increased drastically their revenues in the past 12 months, they've also drastically decreased their losses. So from a $12 billion loss almost to a $7 billion loss, they almost cut that number in half, which is really good. That's something that you do want to see. If we look at the balance sheet, we can see here at Q3 2020. If we look at 2021, well, we'll go by Q3 2020. Let's take a look at that. Total assets, $34.39 billion. Total liabilities, $26.37 billion. So that is not the best. What I like to see is a 3-to-1 or at least a 2-to-1. So say they had $26 billion in liabilities, I would want to see $50 billion in assets. When you see a strong balance sheet like that with a 3-to-1 or a 2-to-1, it shows that, number one, if a huge economic recession or huge economic decline were to happen, they'd have more than enough money on the balance sheet to continue with the research and development, to continue to pay their employees, and to continue to push the company, especially in these important growth stages that they have. Also, they could go out and acquire companies that are not doing so well. So it's not terrible. It's not like they have, 26 billion in liabilities and 10 billion in assets. That would be really bad, but it's still not the best. If we look at the total debt, they have 9.83, so basically $10 billion in debt, total equity $8 billion, and cash equivalents of basically just $22 billion. So overall, when we look at their financials, it's not terrible. From a speculative standpoint, it is not bad, but from a traditional fundamental investing standpoint, it is really, really not good. If we look at the price and quick little chart of NIO, this is a 1-week chart, you can see NIO IPO'd not too long ago, which is pretty crazy, back in September of 2018, and we hit highs of about $14, and we had a really big resistance around $6, $7, $8, $9, finally broke that, and then the lows of the Rona, we hit like right around $1.75, $1.80. At one point, we actually hit $1.43. And this is when I started buying NIO. But you have to realize the landscape was completely different at this time, because NIO was talking about bankruptcy. They weren't making their own cars. There was a ton of uncertainty around it, and a lot of people did not think the future was bright. And I was still buying it because I thought of the huge potential upside that NIO had. And then I ended up selling it way, way, way too early at like $4 or $5. And it's whatever, right? Opportunities happen all the time. I missed out on a pretty big one. Now we're back up at $57. So for me, Morningstar and most analysts have a fair value around $30. I do think that if you're buying into NIO right now at $56 a share, you are paying a hefty, hefty premium. But if you're holding NIO for the next 5 to 10 years, I don't think that this is an absolute trash price. I really don't. For me to be buying in, I would need it at least down at 40. 30 would be really, really good. But if I'm holding it for less than 5 years, I'm personally waiting for like $35, $40. If I'm holding it for 5 years plus, then right now it doesn't matter. Because when you're value investing and just investing in general for the long term, the longer your outlook of holding this stock, the less precise you have to be with your buy-ins. And it's the exact opposite with the less time you plan to hold the stock. Like say you want to get in NIO for 1 to 2 years, that's when you plan to cash out. Then you have to be a lot more laser focused on your entries and your exits. Because think about if you're 64 years old and you want to retire in 2 years and you put some money in NIO and then some terrible news comes out, NIO dumps down to $24, which really wouldn't be surprising to me. If some truly bad news came out, I wouldn't be surprised if it dumped to $25. It's very volatile. Well, if it dumps to $25 within the next year, which realize this, that even if it dumped to $25 by June, we're still up 2,000% in the past 180, or we're still up, 2,000% in the past year, which is nuts. So it's like that would still be a huge year, but you might not be able to retire. You might not be able to liquidate your money. You might have to work a second job. Like there's a lot of problems and a lot of things that happens with that. So if you're younger, and which is a lot of people who are investing in NIO, younger kids, millennials, I think that buying here is not a terrible idea. I think that if you have a long-term outlook on this, get ready for volatility, keep some cash on the sidelines to continue to average down as this thing, probably will pull back pretty soon. But overall, I like NIO. I think they have a bright future. I just think it's extremely volatile and speculative. So let me know what you guys think. I'd love to hear from you guys. Hit the like button, subscribe to this channel. It really means the world to me. And let me know what stocks you want me to look into in the next couple of weeks. Thank you guys for watching. Thank you for the support. Peace.